we're going to prepare a trial balance for the month. So what we're going to do is we're going to set up our journal. This will be part A. This is our general. And do you know where you can get some working papers?
On Wiley Plus?
On Wiley Plus, if you go to the chapter, you actually can scroll down and there's a section where it has working papers on Excel. So you don't have to start off with blank templates. Anyone else need one? Okay. All right, so we're going to have our date column. You have your account. An explanation column. Now on the handout I gave you, it doesn't have the reference column for posting. You can add that because we're going to have to eventually post. And then of course you're going to have your debits and your credits.
We don't have a reference column.
Yeah, so you're going to add that. You can add that little off to the side. Okay. Now the very first thing is that we're going to do the analyzing. Again, when you analyze, it's a 4-step process. First thing you want to do is, 1, identify the accounts. 2, determine the normal balance for each account. 3, determine if the account will increase or decrease. So if the account will go up or go down. And then finally, the 4th step is determine if the account will be debited or credited. Okay. So you identify the account, determine the normal balance of the accounts identified, determine if the account is going up or going down, and then finally determine if you should debit it or credit it. I'll go ahead and put it a bit here. So, for the first, so this is Chamberlain Services, formed on May 1st, 2014. The following transactions took place during the first month of May. So there's 12 transactions. So that's problem 2-3B. So let's read it again. Stockholders invested $50,000 cash in exchange for common stock. So cash is one account, common stock is the other account. Okay, we're all on the same page now?
Yes.
Sorry. All right. Number 2, determine the normal balance. So what's the normal balance of cash? Okay, cash has a normal balance of debit. Now what about common stock? Credit. So common stock is going to have a normal, God bless you, of credit. So that's step 2. Now is it going to go up or go down for cash?
Oh, cash is going to go up.
Are we receiving cash or paying out cash?
Receiving.
We're receiving cash. So that's going to increase. The transaction is going to increase our cash. So it's going to go up. Now what about common stock? Is it going to go up or go down?
It's going to go up.
Okay, so they're acquiring more shares. We're getting more owner's claims, so the equity is actually going to go up. So it takes care of the first 3 steps. Now what about the 4th step? Are you going to debit or credit cash?
You're going to debit cash.
You're going to debit or credit cash? You're going to debit cash because the account is increasing. The normal balance is debit. And you want to put it on the same side as the normal balance because normal balance means the side of the account that increases. The side of the account that increases. Okay, so this is going to be a debit. And for the common stock, are we going to debit or credit it? We're going to credit it. Reason being, normal balance is credit, the account is increasing, So the same side as the normal balance. Any questions on that? So this is the stuff we're doing in our head, analyzing. So then, what date did this happen? This is say May 1st. So we're going to have May 1st as our date. First transaction of May. The account we're going to list first is the account to be debited.
Cash.
So that means that we're going to list cash first. And what's the dollar amount?
$50,000.
$50,000. So we're going to debit $50,000. Now there's no need to use dollar signs in the journal. The assumption is that everything is in the US dollar. We don't put anything in the reference column. We leave that blank. Credit is also left blank. And what do we do next?
We're going to credit common stock.
Okay, we're going to credit common stock. So what we're going to do is we are going to indent, so tab over, and we're going to list common stock on the second line, indent to indicate that we are crediting it, and then we're going to put the $50,000 on the credit side. And what's the last thing we do for a journal entry? We provide an explanation. So if we were going to do an explanation, we would say stockholders invested in company. You may put something else. Each person's might be different. It's just a brief explanation of why you're doing what you're doing. Now again, on your test on Friday, you don't need to provide an explanation. I will not be grading the explanation. I just want to make sure you can do good formats for the debits and credits. Any questions? Okay, the next entry, you're going to skip a space. And our next entry occurs on May 2nd, the second one for May. We'll do the same process all over again. So our first step is to do what?
There's no entry.
Identify the accounts. Now we look at this one, it says hired 2 employees to work in the warehouse. They will each be paid a salary of $2,800. Okay, so when this transaction is occurring, we're hiring someone. Okay, so hired. Now when you hire someone, does your assets change?
No.
Do your liabilities change?
No.
Do your equity change?
No.
No. When do they change?
When you have to pay them.
When you actually pay them, or when they do what? They actually work. I don't know if any of you have ever had this happen where you got accepted for a job or hired for a job and you were like, oh, I got a better job, and you never show up to the other job. So just because you hire someone doesn't mean that they're actually going to work for you. You can't recognize it until they actually punch in the clock and they actually start doing work. At that point, you become liable, and then when you actually pay them, then you'll actually what? Decrease your cash and so forth and recognize the expense. Or if you incur it and you plan to pay them later, you will still recognize the expense when it actually happens. So for this particular one, there is no entry.
We put no entry on the journal?
Technically speaking, you would just completely omit it.
Right.
There's no need to do this. And for this assignment right here, I would say put no entry so that you're clear why you didn't do anything. On Wiley Plus, however, you have to follow the instructions. Okay, next one. This 2 is the third entry, and it says the date is May 1st. We have signed a 2-year rental agreement on a warehouse, paid $2,400 cash in advance for the first year.
Prepaid debit, prepaid rent, and credit cash.
So, we're going to identify the accounts. Prepaid rent. It's not actual rent expense because we haven't actually used the actual space. However, we are actually paying cash on the first. So cash would be the other account name. No expense yet. Because time hasn't passed, we haven't actually used or benefit from that expense. Any question on the 2 accounts? Next thing, normal balance. Now, what type of account is prepaid rent?
It's an asset.
It's an asset. Prepaid rent is an asset. Reason why it's an asset is that giving you a future economic benefit. What's the benefit? You get to stay in their place by paying them this fee. And that's going to happen in the future. So this is an asset, it's a resource. So the normal balance would be debit. And of course, normal balance for cash is debit. Does not change. Normal balance is going to remain constant for each account. And the third thing is prepaid rent going to go up or go down as a result of paying for the rent in advance.
It's gonna go up.
It's going to increase.
So you're gonna have its own column and it won't be like under account receivable.
No, prepaid rent is a separate account.
Okay.
It's its own account. Now, what about cash? You're paying,
It's gonna go down. Credit cash.
it's going to go down. When you pay something, your account goes down, your cash account goes down. Does that make sense? Question? Okay. Now, the last part is, okay, determine if the account will be debit or credit. Well, the normal balance is debit, the account is increasing, so prepaid is going to be debited, right? And cash, it decreases, but the normal balance is debit. So what are you going to do?
Credit.
The opposite of the normal balance. Because it's decreasing, opposite of normal balance, so you will credit cash. Everybody understand that process of thinking? So when we record it, you're going to skip a space. You're going to have May 1st. You're going to debit. Which one?
Rent.
Prepaid rent. So that was the one we're going to list first. We list our debits first and then our credits. We read left to right. So we're going to have prepaid rent. And how much was it for?
24,000.
And that's for what length of time?
1 year.
1 year. And I'm going to go ahead and put 24,000 on the credit side because I know every journal entry I have to prepare, it has to be in balance. My debits have to equal my credits. So the second one is going to be cash. So I'm going to indent, and we'll have cash for 24,000. Everybody got it? Question? Okay. Next one. You can put an explanation on this exercise, but it's not required, and I'm going to run out of room pretty soon. But if it helps you can put it down.